This lesson is a little bit about technical indicators. Now, I'm going to tell you right now, I do not use technical indicators for intraday charts while I'm day trading. Okay, what I do use is support, resistance, trend. I'm looking at the charts and I'm looking at volume underneath it. That's it. I don't use any of these fancy indicators. If I were going to use indicators, I would use them based on momentum. So let me show you how momentum indicators work. So maybe you've purchased one of these toy rockets when you're a kid, and when you shoot off a rocket, it goes off from the ground really fast starting out, and within a few seconds it runs out of fuel. So after that, it continues up, but it slows down and slows down and slows down until finally it reaches a balance between going up and going down. And just for a moment, it's hanging there in the air. Then gravity starts to take over and it starts to come down and come down, and speed increases as the rocket goes down, and finally it falls back to Earth at the maximum velocity. So stock prices are a lot like that. What happens is news comes out, and you'll often see this with earnings. When a company comes out with better than expected earnings, then the stock will shoot up. And over the next few weeks, typically, the stock will go up, it'll go up, but you can see it slowing down. It's not increasing as quickly as it did in the beginning down here. And then you start to see it level off. Now, after a while, the people who purchased along the way, they're going to figure out this is close to the highest price they're going to get. And so they're going to start selling their stock. And that's going to start to push prices back down if enough sellers come in. And then that's going to gather momentum to the downside. Then at some point, we're going to hit the low and the buyers are going to jump back in again. So when you see a stock slowing down and starting to go sideways, that's a good indication that it might go back down again. Now, it's possible it might go sideways for a little ways and then head back up again. But a lot of times, if you watch, it's a good point to look for a reversal. So when I see that, where it's a balance between buyers and sellers, usually the next move, up or down, I'm going to jump on. Okay? But this is the principle of momentum. When stocks shoot off, it's likely, in high volume, it's likely to keep going for a while. And when they balance out, it's likely to head back down again. And this is true on a daily chart over a period of weeks, as well as an intraday chart over a period of every candle is 2 minutes or 5 minutes. Okay, now, if you want to set up momentum indicators on your charts, this is how you do it. You click on this, the FX, and these are the three best technical indicators for momentum. MACD is what that's called, momentum indicator, and stochastics. Okay, now once again, I don't use these, but this can help you to see the momentum of a stock you're trading. So there's one other indicator I want to show you that is useful, and it's right here, the moving average. A moving average is going to look back and look at how many candles, in this case, these are 2-minute charts, so 2-minute candles. It's going to look at the last 50 2-minute candles and give you the average price, and that creates the red line. Now they call it a moving average because every time a new candle comes up every 2 minutes, we're going to go back, and the 51st candle is going to drop off, and the new candle is going to affect the direction of the indicator, the line, just a little bit. And so it keeps moving as the stock moves. So you can see with the direction of the 50 period moving average, and clearly, the stock is moving down. The Spiders ETF is moving down. So that's going to help smooth out the data for you. That that can be useful. And sometimes the stock or the ETF will bounce off in a downtrend, bounce off the indicator and come back down. Or if it's in an uptrend, it'll bounce off it and go up again. So that's how I would use the moving averages, just to help you see the direction of the stock and when it's turning around. Now, one thing I would advise you is do not use more than 2 technical indicators like MACD and stochastics, because it gets confusing. What if one indicator says something the other doesn't? Well, that can be very confusing and unclear what you should do. So if you are going to use technical indicators, you need to learn them really well. Read about them, learn when they work and when they don't, what their limitations are, and so forth. Now, this is not going to, I'm not going to teach you about all these different indicators because that's well beyond the scope of these lessons. Just be aware that this is something you could use if you want to. So let's review. Momentum shows a shift from buyers to sellers and vice versa. Momentum indicators include stochastics, MACD, and the momentum indicator. Moving averages smooth prices and help us see the direction of the stock. Go ahead and take the quiz now, and when you're ready, move on to the next lesson.